Hey traders, and welcome back to Market on Mic. Don't forget, this is your weekly getaway into the world of price action, market psychology, and the readings behind global finances. As you already know, I am Natasha, and I have me here, of course, my co host, Daniel.
All right, Natasha, thank you very much for warmly inviting me or announcing my amazing presence in the podcast. It's good to be back for another exciting episode of Market Mike. I'm Daniel, and this is actually going to be a wrap for the month of July. So July has been pretty, what I call it, silent and loud at the same time. Right, so It's been a month. You know, the month teased with a whole lot of momentum, but the market stayed mysterious. That's why I can't seem to figure out what really happened in the month. So we had informations like the Fed, sitting tight with interest rates. We had big tech flexing their muscles. We had the dollar, getting a lot of bluffs, and commodities as well. So let's just say not all that glitters is gold or silver.
Are you right?
Yeah, so we had a whole lot of instruments that were
guys.
showing this
So
strength.
in fact, this is the last day of July, and the month has been weird, right? So we actually have a lot to unpack. From equities, the FX, metals. This particular episode will definitely matter for our August positioning, right? So let's jump into what really moves the market in July.
Yep.
Okay, so let's actually start with the big boards. We actually see that the S&P 500 actually ended July up about 2.5%. The Nasdaq was around 3.1, which was actually, it was a good month.
Yeah,
right?
for the US global, in fact, majorly for the US global indices or equity market, it was actually a pretty exciting month.
Yes, of course. And we saw the Nasdaq 100 leading the way as usual. So that means we are continuing the AI world rally.
Yep.
Because we know that if there's one thing that is fueling that particular market right now, is AI.
Yeah.
We have the AI narrative going, but with growing whispers of overbought signals. I mean, if you're following this market as far back as 2020, you'd realize that this market has actually, if you look at it with your RSI, it's definitely overbought.
But if you look at the market or the chart of the Nasdaq or the US 500, earlier this year with the whole tariff issue, caused the market to dip, create a healthy dip or a healthy retracement, and which actually gave a whole lot of upsides for that upside rally for the equity market.
Exactly. And traders were not really chasing as aggressively this month. I mean, the volumes were actually lighter.
Yeah, we weren't seeing that so much. It was cool and steady, actually.
Yes, and there were plenty of sell the news moments, especially around earnings. But risk appetite, it's still alive, but just very cautious. Just like what Daniel said earlier, we actually saw the market, do some exciting rallies. But of course, it was more of a there was a lot of cautiousness in the market this month, guys. Yeah, so for the US market, we saw it gain, but it was still as quiet as it was loud.
Yeah, that's what I said. Quiet and loud at the same time.
Yeah, it was still quiet.
All right, so we had mostly the tech earnings plus AI glow up. Right, so July was a big tech reporting party. With earning reports coming in, we had a lot of earning reports for the last quarter. That's the April, May, June quarter. It was actually an earning report for big tech companies, and it came out massive. It was an explosive breakout. All right, we're seeing reports from Microsoft, report from Meta, beating expectation based on their rollout and the likes. It was actually really, really an exciting month. We saw Microsoft, they kept their AI crown steady. We saw Azure is still growing up, and Copilot is turning curiosity into real revenue.
Yeah.
Yes, but Apple was kind of a little bit laggard. Apple did not have a good month, and that was majorly because of a dip in iPhone sales, which were actually caused by tariff. We're seeing a lot of, even Trump threatened the 50% tariff on Apple. We're seeing they had plans to go set up their, I think their base in India.
All the way in India.
I think it's India.
Trump just recently hit India with about a 25% tariff for buying.
Apple has been in trouble. So Apple has actually been in trouble.
Yeah.
So Apple did not really have a good month, but we're seeing Microsoft, Meta, Nvidia, yes, those were the tech stocks that were actually causing the US market or the US equity market, especially the Nasdaq and the S&P 500, massively rallied to the upside. So another thing that affected Apple was hardware fatigue. All right, but services like iCloud, Apple Pay, and subscription, they held the fort basically, but it was really enough.
With Apple, you have to pay for everything. So even when the devices are not selling, you have services to pay for. So exactly. I think that actually gave them a good run for the month.
Yeah, so we're also looking at Amazon. Amazon had a strong front. Their AWS bounced back, and its e-commerce segment surprised everyone with margin gain. Like we were seeing, or their e-commerce segment increasing massively, and it actually caused Amazon to rise incredibly. And I think Amazon contributes to about 8% of the Nasdaq in terms of effect. So Amazon rally also reflected on the Nasdaq itself. So here's the trader's takeaway. Investors aren't just rewarding growth anymore, but they want clarity, profitability, and AI utility that's measurable, not just magical. Yes.
So basically, the honeymoon phase of AI is over, and Wall Street wants to see the receipt.
Yes, let us see.
I mean, there was a time the US 100 was just pushing up because we had new AIs just being released, and definitely that was what every investor wanted to put their hands into. But right now, they want to see how AI is paying, right? So right now, nobody's writing checks for AIs right now. AI has to begin to write checks. Exactly, for investors at this particular point in time. So guys, let's move to the Forex. That is, when you're talking about Forex, there's no way you talk about Forex without talking about the dollar.
Yes.
Right? So now, to the FX side of the world, and let me tell you, the US dollars walked into July with swagger. I mean, from the beginning of January, from Trump hitting tariff and all of that, we actually see that the dollar was having pretty weak year. In fact, I was at some point thinking we might literally just see the dollar remain this way for the whole year. But who was I kidding? Because the dollar came to July, like I said, very prepared. And we actually saw that the dollar index surged to a near 107. I mean, it's the strongest month close since April, thanks to the solid job data and the Fed refusing to flinch.
All right, so we've been having this with Fed and President of the United States. Donald Trump has been craving, the Fed to cut rate and the like, but the Fed has refused to flinch.
They are not. They are standing on that very strongly.
And is standing on the ground that nope, there's no reason to cut rate at the moment. He's actually giving some little bit of positive sentiment to the US itself.
Exactly, and we already know that once the dollar goes up, major currencies come down. So we actually saw the Euro USD got pressed down to about 1.15 to 1.16. So it was hurt by weak manufacturing numbers out of Germany and sluggish the Eurozone inflation. Let's be very honest, the Euro has not been back since COVID-19.
Well, basically, the rally in Euro USD has been caused majorly by the weakness in the dollar. Right? And also recently we saw a major drop in the euro due to the EU-US trade deal. They agreed on a 50% tariff on the European Union and literally caused the euro to crash further. Right? So those are some of the other influence or some of the other reasons why we're seeing a bearish momentum in Euro USD basically. And what do you think? Could that continue?
Well, I mean, if the dollar came into July very, very ready, I mean, we're moving into August, and I don't think Trump is ready to back down now. I mean, he has been able to hold the dollar down for close to half of the year, right? And, if the dollar is beginning to peak, it shows that probably healthy returns. I mean, we've seen the deals he's been making with economies like Japan, China.
And it's reflecting in their GDP.
Exactly, and it's beginning to reflect, even if it's still a little bit causing a bit of inflation based on probably unsettled negotiations, which is supposed to come to an end today, right? If the dollar is again strong, we can only finger crossed, because you never really underestimate the dollar. It doesn't stay down for so long. And we actually saw the GBP USD did a little mid-month dance up and down around 1.27 as the UK inflation cooled, but growth data stayed muddy. So this had kept the GBP down, and commodity currencies like the Aussies and Kiwi took hit on the back of lower Chinese demand. and rate hikes fatigue. So the team, it's a dollar-dominated world right now, and FX traders are playing defense.
Yeah, FX traders are actually playing defense. So major currencies basically, like Natasha rightly said, the Aussie and the Kiwi, that's the AUD and the NZD. But they actually took a hit basically because of the issue in the Chinese market, and it's actually has been quite muddy and sticky, and basically it has been shaky. And the commodities from shining to shaky. All right, so let's get into the trenches with commodities. So we're looking at the crude oil. In our previous podcast, on our last podcast, we spoke about how oil has been a lead to silence due to nothing exciting was happening in terms of oil demand and supply and the like. So the market had just been in a very tight range. All right, so we saw the Brent crude oil was a sleepy bowl. Right, like I rightly said, it wasn't doing anything, so it was just literally asleep, staying in a tight range between $68 and $72 per barrel, propped up by OPEC and some geopolitical drama. Right, so recently we saw a literal breakout to the upside, and we'll most likely see that move continue. Right, and also gold lost its sparkle. Like I said, not all things that are shiny
is gold
in this month. So gold lost sparkle this month. It pulled back to about $3,300 per ounce, with the dollar on its tear. So dollar gained a whole lot of strength and a whole lot of momentum that literally caused the gold markets to fall. So gold did not really do so bad, because at some point this month we saw gold at somewhere around 3-4. But the dollar came, showed its head
dollar came ready for July.
And we saw gold drop all the way back down.
We can say that gold isn't just special.
It needs to be special again.
I know, it's right.
Even silver, that was doing incredibly well, followed towards the ending of the month around $41 per ounce or so, with industrial demand looking a bit soft. And then there's copper, the so-called Dr. Copper. All right, so copper slipped to around $8,200 per ton. Why? And the reason for this was because of global growth fears, especially with China's economy looking a bit wobbly. If copper is the economic heartbeat, then July's pause, let's just say it wasn't winning any sprints. Yeah.
Exactly. So now, actually not flatlining, but definitely not racing to the finish line either. All right, guys. So now we also saw that one thing or one particular information that really held the markets tight this particular month was the Fed's not so subtle hint. And then we actually saw the FOMC yesterday, and they held interest rates at a 4.5% as expected. But Powell press conference was a masterclass in maybe not. He said all the usual lines: data dependent, vigilant, not quite there yet, basically no cut now, but they haven't ruled out a fun surprise later. So traders are in limbo, trying to read the tea leaves. Like we are pricing in a 60% chance of a September rate cut. But the next couple of jobs and inflation reports will be the real tie breakers.
Exactly. And when it comes to Powell he basically doesn't say things the way it is, right?
Yep.
He tells you, okay, we're still looking at it. We're still trying to monitor it. We're still trying to track it. We're not quite there yet. We are getting closer and the like. So he's not a dovish guy when it comes to interest.
Not at all.
He doesn't look at cutting rates. He's always on the lookout for either to keep the rate steady or even possible hike, right? Because when we're doing the whole hike and everything, it was quick.
I mean, every news we had, there was an interest rate hike.
Yes, and now it's time to cut. Nope, it's just keeping it.
Well, they're not yet at the 2% inflation low yet, and the tariff fears are still there, right? So definitely, there's still. I mean, if you listen to Powell's speech yesterday, you see where he spoke about areas in the economy whereby there seem to be inflation, like household appliances and certain things. And he even said that, some certain things were not supposed to be expensive, but due to some other things getting expensive, it was like in the same range. So it was like, oh, why not? So definitely, they're still trying to make sure that irrespective of whatever backfire may come from the tariff issues, they are still very well safe and playing it safe. So, guys,
and let's just have a little brief of reflection on the crypto market. So even the crypto market did some. Actually, we saw the Bitcoin getting to an all-time high of $122,000. But since then, it's just been a little silent. Retracement to about $117,000. Going back to 118. So it hasn't been doing so much. So July for the crypto market hasn't been so exciting, right? It's been good, but not so exciting.
July, from a trader's perspective, July was a month of deep thinking, right? So as much as there were movements, there were not volumes on the market because investors want to see receipt. They are tired of just following the aroma. They want to see that food that is good, right? So this is the cheat sheets for July. So here is what July actually told us. The market is still very optimistic, but it's growing up, right? AI is no longer a magic word anymore. It needs to show result. Exactly.
Yeah, so investors,
so
traders,
it's not about you having AIs right now. It's you having those AIs that people want. They need to see the bills coming in.
Yeah.
And the dollar is back in charge and you can't ignore it.
No, you
really
can't.
You cannot ignore it. And metals are mixed. Gold and silver are a bit sleepy and copper is a warrior.
Yes.
And traders, we are all sitting on our hands a bit more, waiting for the Fed to make a move.
Right, so and we also would not forget that today, 31st of July, marks the end of the 90-day tariff pause.
Yes.
Right, so going into Friday, that's the 1st of August, which is also NFP. Yeah, so you also want to watch out for NFP, guys, tomorrow, which is going to be quite exciting. And if the job data also shows a whole lot of persistence, comes out good once more, we may most likely, see the US dollar gathering a whole lot of intense strength. That the further strength in the dollar. All right, so you want to watch out for NFP for tomorrow. But trust me, I believe it's actually going to come out good, and we're going to see further, sell off on Euro USD, GBP USD.
Exactly. And all of these things is also going to give sentiment in if we should be expecting a September rate cut. Right? Because every data from now, that is from the beginning of August to the end of August, is actually going to matter. Right? To see if Powell will probably go with Trump on the dovish side, or if he's still going to stand tall on his hawkish statement, right?
So August will be the big test, guys, right? So is August going to be a soft landing, or is it going to be a flight plan? So can we trust this rally, and will the Fed finally give us a hint? So these are questions that will be answered in the month of August. So August, trust me, we're most likely going to see a whole lot of volatility coming into August. The whole tariff issues come back, because if you notice, during the time of tariff, the volatility was intense, and during the 90-day pause, we saw a lot of recovery in the market, and July was a little bit silently loud, right? But coming into August, we may see the loud, the volume being increased quite a little bit.
Yes, guys, and let's not forget, this is the world for the dollar, man, and we're going to be tracking the US jobs
just tomorrow.
Yes, the CPI and global risk flow, plus some spicy setup in commodities and tech as well.
Yep. So that brings us to the end of this particular episode. I hope we're able to.
Yes, exactly. Grasp and relate. So in case probably somewhere during the month you were not understanding what the chat was doing, I hope that this particular episode has brought clarity.
Exactly.
Yes, and with that clarity, you're able to plan better for the next
Sets you up
month.
better for August.
Exactly.
So right. So that brings us to the end of this particular episode. So if you liked this episode, come on, smash that like button. Subscribe to the channel. You can listen to us on Spotify, also at Market on Mic, and just also put on that notification bell. Right. All right. So you could get our episodes back to back. And also
yes, guys.
Section. Which instrument are you trading?
And don't forget to subscribe on YouTube.
Yeah.
Right. Follow us on Instagram, Twitter. And thank you for riding with us through July.
Yes, thank you guys for riding with us through the month of July. You guys are always amazing. And it's always
guys.
Exciting to bring the market right to your doorstep.
So as always,
keep your stop loss tight,
your chats clean,
and your mindset clear.
See you in the next episode. Bye.
Bye, guys.